Hey everyone, John Henry here, Slingshot Futures Trading Group, SSFTG. In this video, we're going to be going over the same concept of overanalyzed, which we did as sort of a concept video a while back. But this one, we're going to be going over micro Bitcoin futures and combining them or kind of referencing them and analyzing the differences between regular Bitcoin, right? So having a connection to Coinbase or Bitcoin in and of itself versus the Bitcoin futures. What are the unique benefits and why would someone trade micro Bitcoin futures instead of the regular Bitcoin side of things? So zooming out to a 4-hour chart on micro Bitcoin, which is MBT, that's Mike Bravo Tango. You can see that in the top left. That is the symbol for micro Bitcoin futures. And if we look at this, we can see some things that do stand out that you're not going to see on a regular Bitcoin chart. One of the first things, there's gaps. Right, remember, this is based in U.S. markets, so it can only trade while the U.S. markets are open, and if nobody's there to manage it, then nobody's going to be able to trade it. That means that the futures side of things do close over the weekend, and they reopen again on Sunday at 6 p.m. Eastern, whenever your time slot is for that. But so there is a little bit of a time gap, and here on the other chart, I have regular Bitcoin, and you can see there are some differences. That's where halfway decent moves typically take place. Interestingly enough, kind of funny how that works. So when it comes to the micro Bitcoin futures, there is a little bit of a concern in that you can't trade at all times. One of the beautiful things about Bitcoin in and of itself is that if I wanted to place a trade at 3 in the morning on a Sunday on Christmas, I can. You know, it doesn't matter. I can trade whenever I want, however I want. That's the cool thing about it. So there's a little bit of a limiting factor when you're looking at the micro Bitcoin futures. But in the same regard, it's also a little bit more simplified. You'll notice there's no decimals. Right? There's no 33,005 and 37 cents and all the other stuff. It gets rid of the decimals and makes things a little bit easier. And each incremental tick, if we zoom in significantly closer here, let's zoom way in. And I'll put a line here at 555. And you'll notice the next snap down is at 50. So this ticks in $5 increments, which means that during periods of incredible volatility, it's going to have a little bit less volatility. You're not going to be exposed to all of the huge back and forths, because for micro Bitcoin to actually plot a tick in this case, it must have moved $5. That's still not hard to do considering it's trading in the $40,000 mark, but you know, that is a nice little kind of buffer in terms of volatility. Now, one of the big things when I'm looking at micro Bitcoin futures versus Bitcoin is what is the anticipation? And let me get rid of the drawing objects here so we don't see all the other stuff. There we go. So what I mean by that is, what am I anticipating to take place? What am I looking for? Does it make sense to take it in terms of the risk of a futures contract? Do I think it's going to be expiring soon? Or is it something where I want to be holding on to, as an example, on a daily chart, you know, versus a 5-minute chart? If I'm looking at a faster time frame, micro Bitcoin futures is, you know, you're going to run into some problems here, right? If you zoom into like a 5-minute chart, you can see there are some serious low volatility periods where there's just not much going on, and it gets a little bit gappy. If you're okay trading through some of that, then you're going to be totally fine. Maybe don't go to a 1-minute chart, but you'll be okay. If we look in comparative to the 1-minute chart on the Bitcoin in and of itself, you can see there's no gaps like that. That doesn't happen. It's all nice and consistent and straightforward price structure. So there are going to be some differences between the two. But the one thing that's really nice about it, because obviously a lot of us already have future accounts, is, well, from a risk standpoint here, if I wanted to take a trade on Bitcoin, but maybe I don't want to, you know, trade $40,000 into one coin. You know, like that's a pretty big commitment at this point. Back when it was 6,000 or 7,000, it wasn't so tough. But you know, up here, buying a coin can be a relatively big feat. So with that kind of mentality, then we have to look at it from a different perspective. And with the micro Bitcoin futures, we can look at this from that different perspective. First off, the margin for micro Bitcoin futures is $500, which obviously is a little bit easier to swallow when you're considering the difference of 40,000. But there are some differences, right? In terms of how much you're actually controlling as far as Bitcoin on the micro scale, you're only controlling 0.1 Bitcoin. So if you wanted to trade the equivalent of 1 Bitcoin, that would be 10 contracts, that would be, well, $5,000. Which, hey, guess what? $5,000 is still way better than $42,000. Okay, so in terms of the margin cost, even if you were looking to trade a full Bitcoin, it's actually pretty nice, right? It's not that bad in terms of the cost. And then the other side of things, remember, because it ticks in $5 increments on the micro Bitcoin futures, each $5 increment per contract is 50 cents. So again, if you times that by 10 contracts for 1 full Bitcoin, that would be $5. So it's $5 per tick at 1 Bitcoin, which isn't bad at all. That's definitely a good spot to be in terms of your overall risk. Now, I know it sounds great, and remember, the future side of things, if you're looking for more of like an hourly chart or a 15-minute chart or even a 5-minute chart, just taking some slightly longer term trades, you're going to be totally fine. But if you're looking to scalp it, the micro Bitcoin futures are not where you're looking. That's not going to be your home base. That's going to have a lot of trouble, because remember, when we start going into those faster time frames, there's less and less and less volume, and slippage becomes a really big problem. Now, it's not to say that you can't get it done, but you are going to have to wait for more of the US session in terms of volume. Now, the other side of things is that they are futures contracts. They expire. So that means that you can't hold on to them forever. If you're looking at Bitcoin as an investment, like your stock portfolio for dividends, you're not going to want to trade the futures. That's not going to work, because they are going to expire, and then, well, then you have to keep re-upping new contracts over and over again, and it defeats the purpose. So there are some differences here in terms of how you want to approach this. But from a more intraday trading standpoint, it's a really nice way to reduce your overall risk and allow some nice favorable trades that, even with some of these gaps, can offer up great opportunities. As an example, if we were looking over here with this continuation to the upside, we had a higher low transition, very obvious, nice little V bottom reversal back to the upside into a flag. After the weekend, it gapped way up here. So let's say, we weren't able to actually mess around with the gap at all, but we can utilize a little bit of market structure, just giving us an idea of what kind of risks in all of that look like. That was an L5. If there was an L6, it would have hit it. It was a big rotation off the lows and a big move up. If we have an L5, the typical response is going to be at an L2. And the first time that they pulled back was an L2 right there. So we already know from a pattern perspective, they're following the rules of what we want to see. But from a risk standpoint, what would this trade cost? Right? How much would this risk? If I were looking to come in on this L2 pullback down here, and I wanted to risk, let's say, underneath the L2 or even down to the 3s, right? Let's see how much this would actually cost if we wanted to go in from here down to the L3s and just leave it right around that point. Now, I want to make sure, does that fit a 2-to-1? I'm going to make it as realistic as possible here. That doesn't, so we've got to creep it up just a little. There we go. So as far as the stop placement, that at least allows the target into 2-to-1, and that would be a feasible upside objective. Now, if you look at the risk parameters here, this is per contract, but it's $161.51 a risk to take the trade, with a reward, again, back to the highs 2-to-1, 323. Now, if you compare the difference of what that would cost on regular Bitcoin, that was around $36,460, with a stop down to $34,900. So you're talking almost a $2,000 stop difference if you're looking at a full Bitcoin. There are some big differences here. Now, again, from a cost perspective, the nice thing is, in terms of the risk reward, it's okay if futures expire, because, well, I'm only looking at staying in on this for a couple days at the most. It doesn't have to go on for very long. So as far as where the micro Bitcoin futures are in the way that things are kind of working out, looking at the overall perspective here, we do have a higher low transition. So with the higher low transition off of the base, with the continuation back to the upside, even with a little gap inside there, we have to ask ourselves, first off, is this a wave 1, wave 2, wave 3 scenario? Is this thing really breaking out? So we've got to see, does it qualify the rules? And, well, no, it doesn't. So knowing that that part wasn't valid, that couldn't have been the pullback. So we have to wait. And we finally get another move up. This pullback does fit. It doesn't break it. So we know that at least, maybe, we have a wave 1, wave 2. Let's see if it qualifies. Wave 1, wave 2. we start going up. We've gone about one of those magic numbers, 1.61. Gotta love that. And then down to 0.38. Are you kidding? Like, this is ridiculous. From a fib perspective, that's nuts. So from a continuation standpoint, then, given how close of a move to the downside it was, a lot of bulls are going to be looking for this continuation back up to initially be at around the 0.38. They are following those fib numbers. The next one is going to be a 0.61 up a little bit further. We are going into the weekend. So when this video comes out, it'll be after the weekend. We may have already hit this objective. But realistically, we are going into the weekend with the assumption that this should keep going up. There is some upside potential, and given the upside potential, you know, we've got a little ways to go up towards around 44,500. It would be nice if they didn't hit that over the weekend. If we look at current price, we can see they've actually already hit 44,000. They're getting kind of close. Actually, 44,500. They've already hit it over the weekend. And this will be a really interesting example of the differences between the actual futures and the actual coin themselves, where you can see if you were trading the actual coin, you'd be able to take your profit objective on, right at this point in time, I'm actually recording this on a Saturday. So you'd be able to take your profit on a Saturday while the markets are closed, whereas futures, you're still in long, and you've got to wait until Sunday until things open back up again. Either way, though, that's going to be kind of the differences in terms of the micro Bitcoin futures. I really like them. I think they offer up some awesome opportunities. And as far as the risk profiles go, they're incredible. If you're looking for a way to trade Bitcoin without having to dump 40 grand into it, and if you're looking to more keep it in the realm of like maybe 5,000, a little bit more realistic, right? At least for an intraday trade. Obviously, that's the minimum margin. Times that by 2 to be safe at least. But even 10,000 still a heck of a lot better than 40. It's a nice way to creep your way into a market that could otherwise be potentially unattainable. For some folks, $42,000, that's like Amazon, you know, like Amazon stock. Wow, do I really want to buy one share of Amazon? Like, oh, $3 grand. You know, for some people, that's a really big commitment. And when it comes to Bitcoin, yes, it's nice that they have fractions, but it always feels kind of weird. Like, all right, you know, yay, I own like an eighth of a Bitcoin, you know, like what is that? At least this way, when you're looking at the micro Bitcoin futures, you can still control a decent chunk of Bitcoin, and the risk isn't way too far out there. So that's going to do it for this one. If you have any questions, feel free to drop those in the comments below or shoot those to me via email, jhb@ssftg.com. I hope you found the video useful, interesting, and definitely something to potentially add to your tool belt. It's a nice way to introduce yourself into the micro, or in the micro side of things for Bitcoin, where, you know, again, that 40 grand a coin, that can be a big commitment. It's a lot easier to potentially trade it on the interim with one contract and only have to risk $100 or so. Not too bad. Either way, though, I hope you have a fantastic rest of your day. Enjoy, and we will see you all in the next one. Thanks.